I fully believe that being patient is the biggest skill a trader can actually possess. If you have patience in your locker, then I feel like in the long run, even in the short term, you'll be a much more successful trader than someone who doesn't have any patience at all or isn't as patient as yourself. The main reason for this is you won't be able to sit on your hands. When the markets aren't presenting themselves with a very, very nice setup for you guys to enter, you're not going to be able to resist entering trades. You're not going to be able to wait a week, wait 2 weeks for a setup because you just want to be in trades. And in today's video, I'm going to talk about the main reasons why I believe people can't actually be patient with trading. They might be patient in other aspects of their life, but specifically with trading, why they can't do this. And maybe a few simple practices which can actually help you become patient, whether it be in your trading or any sort of investing or finance-based things which you're actually doing currently. So if we're talking about why traders can't be patient, we firstly have to talk about FOMO, commonly known as fear of missing out. And a lot of people actually suffer from this. I was the same when I was trading at the start, maybe like 4 years ago. I was following traders on Instagram. I was seeing them entering trades. They were up 10K trading gold, up 5K trading US30. And obviously if you're seeing other people make profit, you want a slice of that pie as well. You want some of that profit as well. So if you're not finding setups, but you're seeing other people in setups, this can be quite dangerous for you. So the worst case scenario for this, it can lead to impulse trading and just being impatient when it comes to finding setups. So with impulse trading, what this basically involves is you taking trades which you wouldn't normally take. You see someone, you're scrolling through Instagram, you see someone taking a trade on GBP USD, they're in profit. You then launch up TradingView, get on your GBP USD chart, and then try and force a setup. You look at your plan and you can't find a setup, but because they're in buys, you then try to get into buys. And just because you don't want to miss the move or miss the profit, you enter a trade which isn't perfect. It doesn't even fit your plan, but you enter it just because you want to make profit. And this is because you lack patience and you can't wait for your setup to present itself. If you think about it, that trader which you're actually seeing on Instagram, maybe they've waited a week, 2 weeks to actually get that set up, but you don't know because you only see the profits and the live trades which people actually post. So you have FOMO because you're seeing someone else enter a trade, but maybe they didn't have a trade for 2 weeks. They were just simply waiting, being patient, waiting for a setup to present itself, and then they posted it once it's actually, that setup's actually active. So, and this also leads on to the next point, which is revenge trading. And let's say you get impatient, you impulse trade, and you've then taken a few losses. You're trying to chase the markets, you're trying to chase the profits which aren't there, and you end up losing a couple trades in a row. Then this leads us on to revenge trading, another way which being impatient can actually affect your trading. So you've taken a few losses in a row and you don't want to be in drawdown on your account. And this is reasonable. I don't really know anyone that wants to be in drawdown on their account or anyone that really wants to be on a losing streak. But the reason why revenge trading can lead on from being impatient is because you don't want to end the week on a loss. You don't want to end the month on a loss. So these people, they take a few losses and then they either up their risk. They will still, after taking a few losses, trading against their plan, break the rules. So they'll break their rules, try and recoup the losses which they've just made from breaking their rules in the first place. And if this goes badly, and let's say you lose again, it just increases the amount of drawdown which you're actually in. So let's say you were down 3%, you lost 3 trades, then they try and risk 2%, 3%, just trying to get a quick one-to-one to make back their profits. But if this loses, you're then down 5%, 6%. And if this continues and you still start risking more, it can just be a very, very dangerous spiral. People always talk about the snowball effect in investing and trading. It's not very good if the snowball is, chasing you down a hill. So it's all good if that's collecting profits and it's just getting bigger and bigger. But if it's with a loss, it's a lot worse and it can just swallow you up very, very quickly. And in doing so, you end up losing more money in the process than you actually had lost in the first place trying to revenge trade. So if you just revenge traded, you notice what you've done and then you try and stick to your plan and trade back normally. This is good because you're learning from your mistakes and ideally you don't want to ever do that again. But the people that try and revenge trade for the revenge trading and then just keep going like that, eventually you might win, make back your profits, which obviously this is the worst thing you can do. If you do something bad in your plan or against your rules and it actually works out and you make profit, this is terrible because it kind of convinces you that it's okay to do because you did eventually win and you ended up profit, and it kind of instills a bad mentality which you actually have in your trading. it kind of removes all patience which you actually had. Let's say you were being patient waiting for a setup. You don't think like that anymore because you break your rules, you weren't patient, you chased a trade, you tried to recoup your losses, and you ended up making profit. Worst case scenario. Moving on from this, the next point is unrealistic expectations. This is mainly tailored towards beginners and mainly relevant for people that haven't been trading for multiple years. And unrealistic expectations is usually fed to these beginner traders from social media. So they'll see channels, they'll see Instagram posts, Twitter posts of traders that haven't been trading a very long time and they're making ridiculous profits. So a lot of people market it like, I've only been trading 6 months and this is my second 50k month or my second 6-figure month. If you want to learn how, join my group now or join my broker. If you're a beginner trader and you see this, someone that hasn't been trading very long, they've got a Lamborghini, they've got the profits, kind of instills in your mind that if you don't have that sort of profit within the same time frame as them, then you're not doing very well. Your trading journey is behind what the average trader's journey is, and it kind of forces you to try and either flip your account or again take trades which aren't in your plan. These traders, they don't lack patience as in waiting for setup. It's usually they lack patience within the whole journey of being a trader. So they want to skip loads of steps. They're not very patient. They wouldn't want to wait 2 or 3 years to become profitable or 2 years to build a full trading plan or a full strategy, because I don't feel like within 3 months or 6 months you can actually backtest enough data or forward test or live test enough data to actually build a full trading plan. I just don't feel like you have enough market experience actually being in trades, dealing with drawdown, trading during world events. Like I traded during the Russia-Ukraine situation, during the pandemic, during when Donald Trump was tweeting a lot, that was affecting the markets, which was again quite crazy. So if you haven't traded through multiple events like this, then I don't know how you can say that you've been through enough to call yourself a consistent experienced trader. Whereas a lot of beginner traders or traders which have only been trading a year, they try and skip the steps to, let's say, be on the level that I'm on. If you've only been trading 6 months and you're comparing your journey to my journey, whereas let's say I'm 4 years in right now and I'm trading, I've had 50k days, I've had multiple large payouts from prop firms, consistent months, every single month, and you're not getting that when you've only been trading 6 months. This is because of your lack of patience. You're comparing yourself to someone, let's say you're on day 30 in your trading career and I'm on day 1030, let's say, for example. It's not really a good comparison. It's like starting a business and then comparing your business to Elon Musk and comparing it to, let's say, Tesla. It's just not really a good comparison to actually make, because you're in different stages. Let's say you're still working a job, you can't compare yourself to someone that's a full-time trader that is their sole income. It's not really relative, and you can't really compare that. Because of people's lack of patience, they actually do make these comparisons and then they want to skip steps, maybe risk more, and just not really put in the work which they're actually meant to put in because they lack patience. The next downside to a lack of patience is overtrading. The reason people overtrade is usually because they don't see immediate results with their trades. So a lot of people are aiming for 20%, 30% profit per month. I've seen this on Twitter a lot. People are saying, oh, if I don't make 50% in a month, it's not a good month. But then if you look at the returns of, let's say, hedge funds or institutional traders, they'd be extremely happy with 50% in a year or 30% in a year. I would be pretty happy with making 30% in a year because of the account size. And the reason people overtrade is because they're trading with smaller account sizes. And this also leads to a lack of patience in their trading. They might have really good patience before, but as soon as they start seeing other people's profits on a larger account, whereas they're trading a smaller account, they want the profits which someone else is making. So if you're trading a £10,000 account or an £1,000 account, for example, and you're comparing your profits to someone trading a £200,000, £400,000 account, it's going to be a bit different. You're not going to be able to see the results of that person. You will be able to percentage wise, but not monetary wise, because of obviously the difference in account size, and people will begin to compare themselves. And this leads to overtrading, because to get to the amount of profit which you'd actually have on a larger account, on a smaller account, you'd have to take and win multiple more trades than you would on a larger account. And this is quite simple. If you're making a 1 to 3 on a large account, on a 200k account, you're making £6,000. A 1 to 3 on a £10,000 account is only £300. So you have to do that, 20 more times to actually reach the same profit on a smaller account, and people do this. They try and overtrade, they try and take hundreds of trades in a month just to try and reach larger profit targets, which again can also lead to larger drawdown. If you're only taking 5 trades in a month, you're risking 1% on a large account, you can only lose 5%. Whereas if you're taking 100 trades on a smaller account, risking 1%, you can lose the whole account. Simple as that. The more trades you take, the more risk you're exposing yourself to, which does mean the more profit which you can actually lose in a month. And the last point is actually high volatility. If you're trading Forex, you're trading indices or anything like this, and you're going to experience markets which move hundreds of pips. And when markets are moving quickly like this, you're seeing 50 pip candles, 100 pip candles during certain news events, you're going to have to react quick. And people that are trading emotionally and reacting from these quick movements lack patience. If you have patience, you wait for price to come to your area. You don't act off of these small impulse moves, because why would you act off your emotions and act off what you're seeing? You have to wait for price to come to your area. But if you lack patience, you can't wait for price to return to your buy zone, your sell zone, because you just want to be in the trades quickly. This is very, very dangerous for a lot of traders. I've talked about why traders actually do this and how it can actually affect your trading negatively. So now I'm going to quickly talk about how you can act upon this and maybe use the simple tips which I'm going to say now to actually improve your patience in your trading. So it's essential for you to have a full trading plan. A trading plan which tells you when to enter, when a trade isn't valid, how big is your stop loss, how big is your take profit, when to take profit, when to close early. Everything that you need to know when you're trading is covered in this trading plan. You want to make it simple, so it's not overcomplicated, so you need 3 different factors to close a trade early. You just want a simple solution for each problem which you've actually had in your trading. And by doing this, you want to make it so you need to see something technically to close a trade. It doesn't matter what you're feeling, in your mind. It doesn't matter how you're feeling during the trade. All that matters is if this candle breaks this zone, close the trade. If this candle doesn't do this, the trade isn't valid, do not enter the trade. This is what you want to see. So then it kind of eliminates all confusion in your mind when you're actually looking, okay, is this trade valid? Do I wait for price to come to this level? And in doing so, it will increase your patience whilst waiting for trades, whilst being in drawdown, whilst you're thinking about revenge trading. And I do believe you can increase your patience by having a full plan, because once you've seen your plan is actually working, once you've got the data and you're back testing, you're forward testing to actually see that it works, you're more inclined to be patient and wait for the perfect setups to present themselves before you actually risk your hard-earned money into a trade.